Are granny flats a winning property strategy? In this video, we're going to unpack the costs of building a granny flat, some of the general rules you need to be aware of, how big can the granny flats be, how much do they rent out for, and many more questions. So if you're thinking about property investments, granny flats might be the secret to help you supercharge your portfolio. Now, my name's Luke and I talk all things real estate, renovating and financial freedom. And I run a buyer's agency here in Greater Brisbane called Purpose Property. And we help people secure their own home or an investment property here in the Brisbane market and the surrounds. So roughly a 35-kilometre ring around Brisbane. Now, a lot of our investors are looking at granny flat strategies, and we've helped clients work with builders to buy and create these granny flats, to boost their cash flows, and to have a property portfolio that enables them to continue growing. So how do granny flats work? Essentially, they're known as an auxiliary dwelling or a secondary dwelling. These properties generally need to sit behind the main home, roughly 10 metres from the house. And over the last few years, all councils across Greater Brisbane have allowed these properties to be rented on separate leases. So you can have a different front tenant than you can have to the back tenant. A few years ago, in around 2019, 2020, this was not the case. Brisbane City had never allowed a lease on the front house and a lease on the granny flat to be to different parties. This was because they could create trouble by creating more density in these housing areas by plonking granny flats in people's backyards. And if you had a lot of these go into one area, this could change the look and feel of the location. This is why the councils did that. But since the state government has overruled all of these local councils because of the housing crisis, you can now put a granny flat and put them on dual leases in pretty much any council here in Queensland for the time being. Now, this will be reviewed in 2025, and we're going to wait to hear what the Queensland government says as to whether this can continue going forward. But I'll be very surprised if they ban granny flats across all the council areas, because now they've set a precedent and there's people living in all of these granny flats on separate leases. What are they going to do? Kick them all out now they've allowed it? So I don't think the rules are going to change anytime soon. But of course, it's the government, so let's see what happens. Now, how much does a granny flat cost in 2024? At a minimum, if you're looking for a granny flat on a concrete slab or on a pier construction, then you're looking at a minimum of roughly $150,000 at this point in time for a granny flat built on site. You can get much cheaper granny flats which are pre-built or prefabricated and brought in on a truck, and they're going to be somewhere between $80,000 to $150,000 for that style of property. Obviously, that style of asset is more of a demountable, and it still needs to be hooked up to the plumbing and electricity. So on the cheapest style, you can buy a property for around $80,000 to $150,000, and if you're looking for something built on site, you're probably looking somewhere between $150,000 up to $250,000 for a complete end product. Now, for me and my clients, I'm recommending budget around $200,000 in your head. That is what you're going to need to spend to get the granny flat in place. And that's typically a 65 to 70 square meter gross floor area, excluding exterior decks. Now, what this means is you can fit a 2-bedroom, 1-bathroom granny flat with a kitchen, open plan kitchen and living space, and a small deck, or you can make the deck a bit larger if you'd like to. And this is going to rent for roughly around a 10 to 12% gross yield. So what this means is if you build a granny flat for $200,000, it might rent for $400 per week. Now, one of the really interesting things that we're seeing on the ground is that these granny flats are actually renting out for more than we'd originally anticipated. I've seen some granny flats go for $450, even up to $500 per week for a granny flat, because they have been done well. If the property is on a corner block and it has separate, clear access to the home, if it's been fenced well and set up in a way that makes sense from a subdivision, like it's almost been subdivided, these style of assets tend to draw a premium. Also, if people are constructing those more expensive assets where they feel settled into the space and the house has been well built, those types of granny flats are going to get a higher rent. Some of those cheaper drop-in granny flats are probably going to rent for that $300 to $350 per week, which is still a crazy yield for how much you're paying for those types of assets. But in terms of the quality of tenant and the longevity out of those types of properties, that's why I'd be leaning towards buying and working with a builder who constructs a more longer-term asset, because property should be a long-term investment decision. Now, let's talk about the red tape when it comes to building granny flats, and that is working with the local councils to get certification. Now, your builder should do all of this for you. That's what you're paying them to do. You are paying them to do the legwork, to get the documents, to get the certifier, and make sure the granny flat is ticked off. You can have a chat with the town planner if you want to, but generally granny flats are what's known as accepted developments. And that means as long as you work within all of the council rules, then the granny flat will be certified by a private certifier and ticked off by council as a legal dwelling. Make sure your builder keeps all of this paperwork in check and that you can have a chat with a local town planner or the local council to ensure you're meeting all of these rules. The rough build time frame for a granny flat that is being built on site on a pier construction is about 16 weeks or 4 months. And this is if everything goes to plan. Not everything goes to plan when you're constructing a property. So what that means is it's probably going to be more like 5 or 6 months in terms of an end-to-end process. So I would budget, if it was me in my head, 6 months to do the granny flat build. Yes, it's a little bit longer, but you've got to give yourself that headroom or wiggle room. If you're trying to make things very tight and you can't cash flow if it's going to be over that 4-month period, I wouldn't take the risk. I'd make sure I have the buffer in place, knowing that it's going to probably be up to a 6-month timeline to construct and rent out the granny flat. Now, our super combo stacker strategy when it comes to property investment is to use these granny flats to supercharge your property portfolio. The way I've said this in the past is buy these bigger blocks. Buy a 600, 700, 800, 1,000 square meter plus block where you construct a granny flat. Essentially, you get to subdivide without subdividing and paying the subdivision costs, and you're getting a much higher yield on these properties. So for me, I'd buy, say, 2, maybe 3, 4 assets which have granny flat potential, ideally on corner blocks or with nice, clear, drivable side access, between block sizes of 600 to 1,000 square meters. A good example is a 700 square meter block size because these are unlikely to be subdivided, so you're not having to pay a subdivision premium, but you can still comfortably fit a granny flat on these types and sizes of homes. So say I've got 3 houses and they're 700 square meter blocks each, and I went through and bought them for 600K a pop. Now I've gone back and renovated each of them. I've added value and then I'm able to refinance out equity. Now I can go back, once I've built the asset base, go back and add these granny flats and really supercharge the yield and look to essentially retire or maybe change my day job now. I've got this stronger cash flow coming through my property portfolio. So this is ways you can stack. You can buy a capital growth asset, you can do a cosmetic renovation, you can then add a granny flat, and you can get the boosted yield off the back of that. So there's different ways you can look at leveraging out of these types of assets to make the most of them. Now, a question I very commonly get is, isn't a granny flat going to add significant value to my property? I've spent 150 to 200K building this thing, so surely the value has gone up. Well, the answer to that is likely no. Usually granny flats are going to stack up dollar for dollar. So if you bought a $600,000 house and you put on a $200,000 granny flat, the property is probably going to be worth around $800,000, a more cost price. And the reason is granny flats are not sought after by the everyday owner occupier. And that's where most people or most buyers are in terms of the property market. When you're selling those types of assets, you're typically going to have to sell to a very large family who do already want a pre-existing granny flat, or you're going to sell to an investor who is again looking for that higher yield and stronger cash flow from their property portfolio. Another bonus to consider is depreciation benefits. You're typically going to get the best depreciation in the first 5 years in that granny flat build. So make sure you chat with a depreciation specialist, otherwise known as a quantity surveyor, who can give you that depreciation report so you can maximize the benefits in your tax returns. So I hope I have enlightened you when it comes to granny flats. There's actually quite a lot in that strategy and lots of different things to think about when it comes to building granny flats and the process of actually constructing them and getting the most out of them in your property portfolio. If you're looking to buy a property here in Southeast Queensland and you want to sit down and have a chat with myself, whether you're an owner occupier or whether you're an investor, head over to purposeproperty.com.au to book in a free strategy session. We'll sit down and have a chat about your situation, talk about the services that we provide, and leave some time for some questions. And I'd love to hear from you in the comments below. Granny flats have been hotly contested. Do you think granny flats are an amazing strategy or a bit of a dead rubber when it comes to property investing? Make sure you click this video over here if you want to see some recent client purchase examples here in the Brisbane market. And thanks for sticking around to the end. I'll see you in the next one. Peace.